So yesterday we had FOMC announcement which brought some volatility, but we ended up within uh, previous balance and we are forming now it's going to be 5-day balance opening in the upper part, but still within value. So let's first look at the bigger picture. On the monthly we are one time framing higher near the highs. On the weekly we had outside wick up and now we are balancing around the highs. As of now, current wick is red, so and the range is quite narrow. We've seen wider ranges recently. Looking at daily, we stopped one time framing higher on Tuesday, and yesterday we one time framed higher once again. So I have those charts that measure some balance zones, some typical pullback ranges, and so far we are near the upper boundary, and the next extension is around 80 points higher. So we'll see if we can get there. Looking at volume profile, we are building acceptance higher. 20-day VPOC is lower than the 5-day, and we are currently around this 5-day VPOC. And recent months high volume node is below us, so looks quite healthy, to be honest. And looking at the structure of recent dip and rally, we've seen this many times before when we have those very volatile, well not volatile but aggressive moves to the upside here, with gaps here. So this looks pretty normal and business as usual. Looking at the Bollinger Bands, we are near +2, so quite extended again, but nothing too extreme. Let's see how we are on the looking at the implied volatilities. Last week we did break both the lows and the highs of one standard deviation band, and this week is very narrow. We are balancing around the call wall, which is 4400, and near previous week's close. So it seems that we won't get to the highs or to the lows, but it's also end of month on Friday, so this might bring some volatility. I'm not sure how the bonds market is behaving this month. Maybe if we are going to see some bigger rebalancings, we can see some bigger moves, but I'm not sure about that. Here we are in the middle of those two ranges and nothing interesting. If we look at the lagging 20-day plot, we can see that we are reaching upper boundaries of what was expected within the next 20 days when we were here, so a little bit clustering here, so this might be capping the upside, but not that important, I think. So looking at market profile, we are within this 4-day balance, and here is this high volume node. So until we can get away from this balance range, we are going to chop within. So let's think of a game plan for today's session. First, if we are going to open near the highs, so first scenario is we can either make a weak attempt higher and fail, then we will rotate back to the middle, and another possibility is that we will have a stronger move to the upside with volume building higher and with impulsive move without any pullbacks. Then I will try to enter on a pullback, for example, to yesterday's highs to view up, so I can join the rally. This is going to be the second scenario. And if we start moving lower, I really don't have anything interesting to say other than look for exhaustion around value area lows, or even better around the lows. So if we can get here and we build some poor highs, on the way down we see some failed break lower to clean the stops, then I might enter long. I'm not sure about stronger move to the downside, because if we move lower, I won't be entering shorts here. I could enter shorts if we break yesterday's lows, but given that we already traverse entire range, well, I am not that fond of this scenario, so I won't prepare for this and I won't execute. One other thing is that if we have some weaker structure here, maybe if I see an impulsive move down and pull back to, for example, value area high or overnight highs, then maybe as a variation of scenario 1, I will trade one more short, and that's pretty much it. If we stay within yesterday's range, then the session could be pretty boring, to be honest.